And then they also had that L-shaped recovery. The growth cycle started the last quarter of 2023. So we're about 3 quarters into that growth cycle. And that L-shaped recovery hasn't been a bad thing for some of the leaders in that market.
Hey everyone, let's talk about On Semiconductor. They just released their Q2 2024 earnings, and it was just as bad as it was expected to be. However, the stock shot up about 10%. So let's talk about why that is, why the optimism, and where we are in this automotive and industrial cycle. This episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high-yield cash account, offering an industry-leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry-leading 5.1% APY with a high-yield cash account at Public. Go to public.com to learn more. So just last week, we got Tesla's Q2 2024 earnings. Those also weren't so good. But it does appear that the global battery and electric vehicle market is starting to flatten out and possibly recover. At least in China, we are back to growth mode. The rest of the world, excluding China, not so much. And this whole EV market has become something of a proxy for a lot of the integrated device manufacturers, or IDMs, which Onsemi is part of. These are top parts suppliers to the automotive industry and industrial companies in general. We've already gotten a number of not so great earnings announcements, or maybe more specifically, second half of 2024 earnings outlooks from Onsemi's peers, including ST Micro, Renesas, NXP Semiconductors, all of which had a pretty lackluster outlook for the second half of this year and sent their stock prices down after their reports. So what was different for Onsemi?
You may be getting familiar with this chart that we created regarding the market segmentation and where we are in the cycle. On the bottom, auto and industrial has been declining since late 2023 when it had its last peak. And we are thinking that we're currently bottoming. And that's exactly what On Semiconductor has been indicating along with its peers. To understand the problem that investors are having with some of these companies like Onsemi or possibly even Air Test Systems, Lattice Semiconductor, Microchip, some of the top industrial and automotive players. What investors really want to see is an up and to the right steep climb from the bottom. But really, what companies like On Semiconductor have indicated, it's really not going to be that steep climb that we all want. It's going to be more of a very slow climb to the right, or you could call it an L-shaped recovery, which is what CEO Al Corey of On Semiconductor has started calling it.
To add some context to what we're talking about here, let's discuss the numbers just a bit. For Q2, you can see revenue, of course, down 17% year over year to 1.74 billion. Gross margin has fallen and appears to have bottomed out at about 45%, as expected. And in spite of the nasty downturn, Onsemi has remained profitable by all metrics. However, as you may know from our past coverage of Onsemiconductor, this company has repositioned its portfolio of semiconductors to address secular growth trends, the highest growth portions of what we often call the mature node manufacturing segment of the semiconductor industry. These are not leading edge, cutting edge technologies used in AI and accelerated computing infrastructure like NVIDIA's GPUs, or the really advanced networking chips that Broadcom designs and sells for data centers. Rather, when we say mature node manufacturing, we're talking about older, tried and true tech that finds its way into things like the automotive industry. Secular growth trends are things like silicon carbide, or you can see the SiC there, SiC, and silicon power gear. This is powering things like electric vehicles. different types of sensors used in cars and industrial robotics, image sensors, this type of stuff. It's not to say that these are not advanced chips. They're just not manufactured using the same bleeding edge tech that companies like Taiwan Semiconductor is using to make NVIDIA GPUs. So the good news here, despite the downturn for Onsemi, is it appears the company is still very confident in these secular growth drivers, right? This is good news, maybe not for 2024, as it appears the recovery is going to be flat, L-shaped, but through the next few years, Onsemi is still confident that the EV market and other related power and sensor trends are still very much in force.
On Semiconductor has its hands in a lot of different markets. But since we have been talking about EVs specifically, there is a quote from El Khoury in the earnings call that he explained that silicon carbide is only around 6% of global EV market penetration, excluding Tesla. So even if the EV market was to stop growing, only 6% of EV cars have silicon carbide. So there's a lot of room for growth for a company like On Semiconductor in the silicon carbide market. And then also they've entered the data center power market, and they expect that to be a 22% compound annual growth rate in the coming years. For the last couple of quarters, we have talked about how the auto and industrial market would bottom in the summer of this year, 2024. Now we need to focus on the recovery of that market. So let's circle back to the Q3 guidance for On Semiconductor. On a quarter over quarter basis, Q3 numbers are expected to be essentially flat, but customer demand has bottomed out and they're on a path to higher profitability when the recovery does kick in.
One upshot to this guidance in Q3 and possibly in Q4, which we don't have guidance on yet. Onsemi only provides guidance one quarter at a time. One bright spot is it sounds like at the power market. So this is the industrial space power supply market, not EVs, but power infrastructure. That could be things like solar, or it could be EV charging infrastructure. It sounds like some of Onsemi's customer demand is starting to kick in again. Elevated levels of chip inventories have come down. And so that's one upside to this outlook for the second half of the year. While other parts of Onsemi's markets, some of their customers are still trying to burn through excess inventory. Now, that's just an immediate term outlook for Q3, the quarter that we're currently in. And for Q4, it sounds like El Khoury and CFO Thad Trent are not ready to provide any more optimism for Q4 or early 2025. But what we do have is the longer term, let's call it midterm target for Onsemi through calendar year 2027. And that remains unchanged.
Yes, On Semiconductor has a very fine outlook through 2027. You can see that their revenue is expected to be 10 to 12% in compound annual growth rate, which would be 3 times their peers in the semiconductor industry. Gross margin, operating expenses, operating margin, CapEx, all expected to improve, and their free cash flow is expected to grow to 25 to 30%. All this while doing plenty of share buybacks. They expect to return 50% to shareholders through 2027.
Okay, let's round out this discussion here because it sounds like this is going to be a pretty lackluster stock, and the IDMs in general are going to be pretty lackluster for the second half of this year. That's not exactly the story we wanted to hear, but the good news is the downturn for the auto and industrial chip market does indeed appear to be bottoming out. And I will point this out, Casey. This is not wholly dissimilar from what happened with the downturn in consumer PC and smartphone chip demand last year. So all of the semiconductor suppliers for that market, PCs and smartphones in particular, they had all been expecting a bottoming in the market in summer of 2023. That ended up getting pushed out till the fall months, September, October of 2023. So a slight delay in the ultimate cycle bottom. And then they also had that L-shaped recovery. The growth cycle started the last quarter of 2023. So we're about 3/4 into that growth cycle. And that L-shaped recovery hasn't been a bad thing for some of the leaders in that market. You think about our top pick last year and this year, Qualcomm in the consumer space has actually been one of the top performing stocks. And it's certainly not because the revenue has exploded higher like everyone wanted to see, but the profitability has certainly made a comeback. So an L-shaped recovery like what we're looking at for Onsemi, while that may sound very boring, doesn't have to be a bad thing. If we are indeed at the bottom of this auto and industrial market or near it, let's say maybe it even gets pushed out until the autumn of 2024, just like the consumer market did last year before we get a more robust L-shaped flat recovery, on semiconductor can still be a really great investment from here on out. And the reason that is the stock may just simply be very cheap. The market may have priced in quite a bit of pessimism already at this point.
Yes, in fact, Onsemi stock looks pretty darn cheap. On a forward-looking basis, price to earnings 18 to 19 times. On a forward price to free cash flow, 17 to 18 times. This forward-looking valuation really sets a pretty low bar for Onsemi to clear, which we think that it can do. We still have conviction, and we're going to continue holding our position in Onsemi.
Yeah, in fact, I would add, though the stock hasn't done so well the first half of this year, I'm going to stick to my guns here and still call this my favorite IDM pick of 2024. Of course, we'll see how things pan out in Q3 and Q4. We'll keep you updated if our viewpoint on this changes. This is a company that we continue to dollar cost average into. Not a big core holding in our portfolio, but as we DCA and if our bull thesis plays out as we expect, it could become a core holding over the course of the next year or two.
We'll have to take a look at one of my top picks, Lattice Semiconductor, which is down, I believe, about 40% on the year. Stay tuned for that. Make sure you hit the subscribe button and come back for more.
Hint on what went wrong. It may just simply be a valuation issue on a forward-looking basis.
We'll touch on that in our next video. Take a look at our Semiconductor Insider. Just $5 a month gets you access to all kinds of cool stuff, live Q&As over on our Discord channel, all of our published show notes and manuals. See you over there.